Hello, this is Michael Devlin with the Michael Devlin Group and Success Realty with a special report, what happened in Santa Clara County real estate in 2019. Let's look at sales to begin with. December of 2019 versus December of 2018, sales are up. We finished the month, we finished the end of the year very strong in terms of sales. 9% for single family homes increase month over the year, 7% for condos and townhomes. If we look at the total annual sales for the year, they're down 4% for single family homes, 6% for condos, and 4% for townhomes. So they were up in December, but down year overall. One of the interesting things is to look at the different price ranges. So for the areas in the 400 to 1 million range, 400 to 600,000 up to 800 to 1 million range, those in that price range, see how sales are up. 10%, 10%, and 13%. Also notice where sales are down the most, in the 1.4 up to the $2 million range. So are sales up or down? It depends on what you're talking about. They're up in certain price ranges and down in others. If we look at the volume, which is what was the total dollar volume of all of the properties that were sold, you can see that it's up 17% for single family homes for December over 2019 to 2018, 7% for condos and 4% for townhomes. Looking at the total volume for the year, it's down, again reflecting that the number of sales are down, but also this shows the difference in the price range, because you can see that the volume, the total dollar value of the properties is down by more than the sales are down, which means that not only are there fewer sales, there are fewer sales in certain price ranges and more sales in others, redistributing the volume map a bit. If we look at the median price, it was $1,249,000 in December of 2019, which is a 9% increase over 2018. Townhomes and condominiums are down a bit. If we look at the sale to list price ratio, which is the question of how much of what they were asking for did they actually get, you can see that for single family homes, and this is true for condos and townhomes, people are generally getting what they're asking for when they sell the property. They may have had some price reductions, but people are selling for, on average, about what they're looking for, which is a strong market for sellers. If we look at how many new listings were added to the market in 2019, notice it's down a little bit for single family homes, up for condominiums, and down for townhomes. We're not dealing with that, that's year over year. If we're looking at how many months of inventory we have, and this is a metric that is used by some to measure the strength of a market, and what the months of inventory is asking is, if we looked at how many sales we had in the last 30 days, and then we took that and compared it to the current inventory, how long would it take to exhaust our current inventory given the number of sales we have? Now, for townhomes, it's less than half of a month, about half of 1 month of inventory, less than a month for single family, and a little over 1 month for condominiums. Now notice that's down significantly from last year, which is showing the market got stronger for sellers at the end. What is a buyer or seller's market? As it relates to month of inventory, you'll find that people tend to disagree. There are some that say you need 6 months of inventory before it's a normal market. In Silicon Valley, it's been, I haven't seen that for a really, really long time. So let's say that a seller's market is when we have less than 4 months of inventory. Well, if you look at the previous slide, you can see for single family homes and townhomes, we have less than 1 month worth of inventory. This is still a seller's market. Expired listings, they're down. Single family, condominiums, and townhomes, that's because the market was strong. And when the market is strong, listings generally don't expire as much. Again, it's a sign of a strong market for sellers. The median days to sell, it took a whopping 37 days. The median days to sell a condominium, which is up a bit over last year. Townhomes, it took 22 days, and a typical single-family home sold in 18 days in December. If we look at how many active listings we ended the year with, you can see it's down a lot. They were all being sold very quickly. For single-family homes, it's down. For condominiums, it's down. For townhomes, inventory has been tight at the end of the year. Predictions. Well, the predictions for 2020 is that the home price growth is going to flatten. It's not necessarily going to go down, but it's not going to go up. Inventory is still going to be constrained, especially at the entry-level price segments, which in our market in Silicon Valley is 600 to $1 million. Mortgage rates may go up a little bit to 3.88 by the end of the year, but there's going to be tight inventory, and rising mortgage rate is probably going to drop sales near the end of the year. And buyers are continuing to move to affordability, right? And they're looking more in the mid-sized markets. That is evidence from those slides as to price range. So one of the things to think about is, how does Silicon Valley react compared to the nation and the state of California? Now, you'll read articles about what's happening nationally and what's happening in California. How relevant are they to our market? You'll look at the two bottom lines in this chart. The bottom one is the United States, and where the median price is about $300,000. California, the median price of a home is a little over $500,000, and for Santa Clara County, it's over $1 million. It's not just that our graph is higher than the others. What you'll notice if you look at this chart is that the California and the national graph are sort of parallel to each other, right? They're both kind of flat, going up a teensy bit. But notice our market goes up and down and up and down, and seems to move not necessarily connected to the national market or to the California market. And that's because, well, we're in Silicon Valley. And how well is Apple doing, and Google and Cisco? That determines our market more than what's happening nationally or even in the state. So looking for our area, the San Francisco, Oakland, Hayward metropolitan area is actually expected to have a drop in the prices and even a drop in sales. The San Jose, Sunnyvale, Santa Clara metropolitan area, sales are projected for 2020 to go down about 3%, but prices are expected to rise about 2.1%. Mortgage rate predictions, the National Association of Realtors sees it about 3.88. You can see the average of the different Freddie Mac, Fannie Mae, the Mortgage Bankers Association, the National Association of Realtors shows what the interest rates are expected to rise, perhaps as much as 3.8% by the end of the year. Your purchasing power is connected to interest rates. So even though home prices have been going up because interest rates have been going down, that impact that has on people's purchasing power is actually positive. The lower interest rates have offset price increases. Are we going to have a recession? Probably not. In 2020, there's more information that it may not affect real estate, even if it does happen, quite as much as it has in the past. But the economists are pushing back that timetable. And at the same time, rents are rising, right? There's new rent control laws that may be slowing that down a little bit, but rents are obviously not going down and are projected to rise in 2020. That's what I look like. My name is Michael Devlin. I'm a real estate consultant in residential and commercial real estate. I also help people get their real estate license. If you would like to find out more about what your property is worth in this changing market, or how you could buy something either to live in or as an investor and get the best deal possible, reach out to me. I would love to help you.